Most of us are familiar with the concept of a statement. If we maintain a balance over a period of time, and especially if multiple transactions occur since the last statement, it's helpful for our customers to be able to see, in a single document, the number of new charges and payments, as well as the balance currently due and the aging on amounts due as well. Many large companies, unfortunately, will not make payments from a statement, but it does provide them an overview of the account, which many find helpful. A statement helps draw attention to past due amounts in a professional and respectful way while helping us receive payments in a more timely manner. Sometimes companies choose to assess finance charges on past due amounts. Now, this is certainly a decision that needs to be made for each individual company. Many large companies simply refuse to ever pay finance charges. So, if that's the case with your customers, you might want to consider not trying to collect finance charges at all. All it does is leave unpaid balances that roll over month to month or that we have to try to credit back to them. There really is no right or wrong answer to it. If we want to assess finance charges, though, we need to set them up in QuickBooks. Only someone with administrator permissions can create or adjust the finance charges, but we do so from the Preferences window. So we'll move to the top left of the screen, display the Edit menu, and come all the way down to the bottom to Preferences. On the left-hand side, we see a category just for finance charges. So we'll give that a click, and then on the upper top of the screen, we'll select the Company Preferences tab. Finance charges, of course, can't be created for each individual user. Now it's simply a matter of running through the different options. The first question we have to answer is, what should our annual interest rate be? Now, there is a little bit of legality here. You need to check within your state or jurisdiction and make sure that you're not charging too much. It generally is not legal, for example, to charge 50% in finance charges if somebody doesn't pay their bill on time. We can, however, also designate a minimum finance charge. Basically, if we're going to go through the trouble of having to assess a finance charge and send you a bill for it, there's a minimum amount of money that's going to be involved. The next thing we need to decide, is there a grace period? In other words, if we have a bill that's due on the 1st of the month and we pay it on the 5th of the month, is that going to be assessed a finance charge? Many companies provide 15, even 30 days of grace period before they even start assessing these charges. It can also simplify things because sometimes there are holidays, for example. Somebody may have sent a payment, but due to a delay in the mail because of a federal holiday or possibly because of weather conditions, their payment doesn't get there in time. Do we really want to charge those people a finance charge if they were close to paying? Because again, it can just mean more work on our end if the customer has to call and try to get that charge reversed. Because this is QuickBooks and everything we do ultimately has to do with accounting, we need to identify the income or other income account that we're going to use for the finance charges. Finance charges are not the same as a sale of a good or a service, so they go into their own account. Generally, this is going to be something called other income. Now, even though the next two options are a checkbox and a set of radio buttons, I think they really deserve a little bit of thought. The first thing is, do we want to charge finance charges on finance charges or just on the original sale amount? What does that mean? Well, in other words, if someone owes $100 and we apply a $10 finance charge, if they don't pay it by the next statement date, are we going to assess the new finance charge based on the $100 or the $110 amount that's past due? Maybe it's just me and I don't want to sway you in either direction, but this is kind of like playing hardball. To me, assessing finance charges on finance charges is probably a little more than many of us will want to do. But then we get to the next question, which is, how are we going to calculate the finance charge? If somebody makes a purchase on the 1st of the month and it's due in net 30 days and they pay it on the 15th of the next month, is the finance charge, remember that annual percentage rate, is that going to be charged from the 1st of the month or from the end of the month? That's the difference between calculating finance charges based on the due date versus the invoice or the billed date. Lastly, a simple question, do we want to generate physical statements that we print out just for finance charges? So if we're going to charge somebody $10, should we generate an invoice for that, or are we just going to let it appear on their next statement? That's how we set up the finance charges. We didn't actually change any of these, so we're going to just click Cancel on the top right. And now we'll work through the process of how we assess finance charges and generate statements. Generally, we're going to select a particular time of the month, usually that we want to assess finance charges and send out statements. In order to assess the finance charges first, we'll go ahead and do that by accessing the customer menu. Although, as we see, we can also do this from the home screen as well. Go up to the Customers menu, display that menu, and select Assess Finance Charges. After we assess the charges, the screen disappears and they have been assessed and we're done. But now comes the actual last step, which is to create statements for our customers. This, of course, can be done whether we use finance charges or not. We can work with statements from the Customers menu or from the home screen. This time, we'll go ahead and use the home screen. Kind of near the middle bottom, we'll click on the icon that says Statements. One of the first things we need to do is actually designate the statement date, and that does not have to be the current date. Often people try to do statements consistently and try to date them for the 1st or the 15th or the end of the current month. In addition to the statement date, we can also choose the statement period. So if we're generating statements on December 15th, they're probably going to run from the last month. This needs to be designated correctly as well. The next option has to do with what type of statement we're going to generate. There are a couple kinds of statements that can be generated. One is known as an open transaction statement, and the second is known as an activity-based statement. The names identify what types of information are provided on the statement itself. An open transaction statement only shows transactions that are still open as of the statement date. This does not include a history of payments and credits. The activity-based statement, on the other hand, shows all activity over a designated period of time. That includes payments and credits. If we only wanted an open transaction statement, then we would select the radio button, and then we could also say how many transactions we wanted to include. In other words, some that were only a certain number of days past due. We're actually going to do a complete activity-based statement by choosing the statement period from up above. We can generate statements for all customers, for multiple customers we select, for one particular customer, or even customers of a particular type. We can also do them in batches. For example, those who want to have emailed statements, and then a second round for those who want to have printed hard copy statements. So these are kind of the critical settings on the left-hand side, but don't overlook some of the really fine nuances that are on the right. Of course, like everything else that we generate in QuickBooks as output, we have a template, and we may customize that template. But what we want to know is, do we want to create one statement per customer or per job? Do we want to show invoice item details on the statements or just a summary? Do we want to print statements by billing address zip code? And that, of course, is going to be helpful if we're mailing them out. A couple that I really like is, do we want to print the due date on transactions so they know when it was technically due according to their terms? And then lastly, we can skip statements. For example, if somebody doesn't have a balance with us, they don't need a statement. If they have a balance less than a certain amount of money, we can designate that as well. If we have a customer who has not done business with us during a certain accounting period, we can designate not to print those. And also, of course, we usually do not want to generate statements for inactive customers, but we could if we wanted to. With all of that said and done, we could assess finance charges if we hadn't done so already, but otherwise, we can simply come down to the bottom and either choose to print or email. For us, we'll go ahead and just preview them so we have a chance to see them on screen. Of course, it can also be helpful to zoom in so you can actually see what the statement looks like. Now, it is a fact that not everyone wants to assess finance charges. Unless you work in a cash-only business, though, being able to provide statements for your customers, whether you assess finance charges or not, will help them keep track of outstanding balances and will help you manage your receivables more easily.